Hello.
Hello, Steve.
Hello, Jamie.
Happy Monday, Steve.
It's a happy Monday indeed.
It is, and just to kind of share a little bit of trivia with everyone out there, Steve and I reside in Southern California, and the average temperature here at this time of year is usually around 73, 75 if it gets real hot, Steve.
Yeah.
And today we cracked 103 degrees. So
Most of
we're
us
all
don't have
experiencing.
air conditioning. Jamie has air conditioning. I don't have air conditioning, and I'm telling you, these are the days. It's just a couple of them a year, but you got to make it through it. So I got my lemonade going, my Arnold Palmer going, little iced tea and lemonade in remembrance of Arnold.
Indeed. So anyway, supposedly it's supposed to be like magic. Tomorrow it's going to drop back down to normal, but we're getting a nice little taste here before the fall kicks in. So that's how much we love you guys. We're gonna brave this heat in order to bring you this fabulous content that we have today.
Indeed.
So welcome to another edition of the Monday Office Hours. It will be the last one in the month of September. Seems like September just kind of evaporated, went by very quickly. So before we get to the good stuff, let's get the lawyer speak out of the way here. Just want to make sure that everybody here is aware of the fact that we are publishers of information. So what we're doing here today with you guys is simply sharing this information for educational purposes. So please don't misconstrue what we share with you here today as a solicitation to buy or sell stocks or anything else for that matter. If you do need advice on that type of activity, please seek out a registered investment advisor or Series 7 broker, or one of the many other licensed people that are out there set up to do that stuff. Okay, so as always, a little market recap. Let Steve do his thing and describe the kind of schizophrenic activity the market's been engaging in as of late. And of course, we've got a really nice Holly recap for you today. For those of you who are in the know and are subscribers, you know, Holly put on quite a show today and picked the direction quite early, so we'll get into that. Then we'll cover the limit alerts from last week. Another big winner on the blotter from last week, the AGIO, up 4 and 5 points. And then, of course, as always, we're going to have a few new alerts for you guys as well. So, Steve, if you're ready, I'm going to just pass this over to you.
Sure, why not? Bring it.
To let you show everybody what you got going over there. So you should have control.
All right, screen one. Great. You should see a big old giant. We'll come back to the cues, but we'll start with the SPY here. Let me move that out of the way so I can see. All right. So if you're one of the die-hard webinar attendee junkies out there, last time I was with you all was Wednesday evening, Monday, Friday, Thursday, Wednesday. So this was our Wednesday evening, and I started redrawing some lines. I took a few of these mid lines out and put in a support line and put in what I thought was going to be our new range. And so what I'm saying is I essentially drew this line right here as support there, resistance there, excuse me, support there. I felt that this was going to become our new range, and as Thursday's little doji, I'll zoom in there, proved correct, that's the range we're in. So, you know, we're going to continue to stay in this range the way it is until something happens. Now, I've got a little bit of a theory, and you guys know I try not to get too caught up on market flows and news and things, but every now and then we have a catalyst. You know, last week we did have the Fed Open Market Committee catalyst of no more interest rates kicking in the can throughout the election, so no harm, no foul there, which gave us a nice little pop right into our resistance level. So definitely in play there. But here's my theory. You know, it might go on the elections tonight, and we all know that Hillary is the darling of Wall Street. She's the one that pretty much the one percenters in the Wall Street establishment want to see win to keep everything status quo. But if a guy like Trump comes in and starts making changes, then Wall Street might not like that as much. So just a little side note, if for any reason Hillary falls flat tonight in the big debate that everybody in this country is watching tonight, we may see a gap down if Trump has a good night, I guess is what I'm trying to say. If Hillary has a good night and makes a good case, Wall Street Establishment 101 should be intact and safe. Just a little minor prediction by myself. Try not to get too caught up in that stuff. I like to focus on footprints in the sand. But if we do look at the footprints in the sand here, you can see that we did hit our upper band of our new range that I defined, and we've had a couple of gap down days closing on lows. There was no afternoon buyer popping in today like we saw back here. So I think we're just going to go into the debates and see what happens. But again, Wall Street would like to see Hillary do well, and if she doesn't do well, we could see some further weakness. Just a little bit of a quasi-prediction there. I try not to get too much into predictions. Now, I also mentioned the Qs were leading us 1, 2, 3 days ago. Qs were right here on this candle looking like they wanted to break out, and they did make a new high and broke out on all-time highs, but they have since dove right back into the range again. So we're back in no man's land for the most part, SPY and Qs. I think the debates, again, are going to be a catalyst tonight to see if we can take out either this orange line to the downside or this orange line to the upside. And for those that are counting, we're looking at about basically, 217.40 on the SPYs on the upside. And on the downside, we do not want to take out 212.50. That's our range, everybody. And we'll see how it plays out. You got anything you want to add?
No, it's just of course,
No
it will
afternoon
be
buyer
interesting to
today.
see.
Yeah.
It will be interesting to see, how the debates affect the market. Kind of hard to call.
Well, you got over 100 million people watching it, so
Exactly.
it's certainly in play. And we all know that Hillary is the darling of Wall Street. It doesn't matter who you vote for. That's not what we're trying to get after here. Just saying there's going to be two different reactions if one party or the other has a glaring advantage over the next party as we come into tomorrow. Might be even fun to put the futures up tonight and watch how the E-minis trade
Exactly.
overnight. That's what I plan on doing, just to kind of see an early hint. But anyway, we'll digress from that. We're here to talk about price action, not about what ifs and politics.
I think your logic is sound on that, though. I do.
I just want to go on record and say, hey, it's always a
And
possibility.
it is the largest televised event in history.
It's going to be big. I think Twitter's going to blow
people.
up. I'm surprised Twitter. Well, I don't know much about the Twitter deal, what's going on, but tonight I think they're going to smash records on a live event. That's what Twitter really comes in. The value really comes in on a big live event while we're all huddled around, focused on the same thing. That's definitely going to, definitely going to happen tonight.
One thing is for certain, media companies are very happy right now.
Oh yeah, they're going to.
The big networks are licking their chops, that's so to speak.
All right, I'll kick the ball back to you.
Yes, you did, and now let us dig into the content. Okay, so for those of you who are subscribers already, you kind of know the type of performance that Holly put in today. We just updated the screenshot here, so I'll just give everybody a quick gander here as soon as it's kind enough to present itself. Okay, so, after the little choppiness that the market had and kind of, descended down into that lower range, well, not Holly. Holly's been performing well, to say the least here, as of late. And the chart, after sleeping for a little bit here, boom, off to all new time highs. Pretty respectable days as of late. And the beautiful thing about Holly is when the market's getting punished, she doesn't have to go long. She can go short. And boy, let me tell you, today was the prime example of Holly picking her direction early on and, positioning herself accordingly. And, from those of you who are regular attendees of the webinar, whether it be myself and Steve as of late, or on Thursdays it's myself and Andy, about how things have started to change and the data profiles that we've been seeing as of late, not only in the strategies that Holly's been coming up with for the daily sessions, but a lot of things starting to materialize that haven't been showing themselves in the past. After the analysis was done after Friday's trading going into the weekend, we could already see the hopper that was loaded up for today. And, for the first time in a very long time, shorts are outnumbering longs for today's plotter. So we came into today with 4 shorts and only 3 longs, which was very interesting to begin with. And then, of course, we can see, let's just go ahead and sort the strategy plotter by trades today. All of the trades today, with the exception of one, were short trades.
You know, we had the exact same day. If you put up the spiders, I love seeing this, by the way, too, just seeing short across the board, such directional prowess.
Mm-hmm.
And if you go to the daily, that big red candle, that first down day, that was a day that we had the same thing on Holly. It was nothing but shorts and one long. And then ever since in between, it's kind of been a mixture of both. But kind of a bookend there. The last time I saw a day like we're looking at here where everything was short was that day right there. I love these types of days when Holly is recognizing that the path of least resistance is not to be trying to go long and going short. But I'll save. I've got a little bit more on that. I'll save that until Jamie's ready. But I did want to talk about that a little bit.
Right, right. And, one thing I noticed right off the bat, Steve, as soon as Holly started initiating positions this morning, was that it was a nice, even load-in period where it wasn't just one or two that was firing. We can see if we sort by time here.
Yeah, let's do that.
Once the trade started to fire here, 7:01, then not another one for a nice amount of minutes. So these didn't all come in at once.
Hang on right there. Hold on right there. That 8:01 to 8:10 period. You see that?
Mm-hmm.
Okay. I was doing a one-on-one session with a guy, and we were actually talking about Holly at that time. And I was trying to explain to him some of the best ways to not always get too concerned about the individual trades, but, of course, directional bias. And I'll give that sermon again if you guys haven't heard it. I am telling you, the thing I'm so impressed about is when I see Holly at a certain given point rip off about 5 or 6 trades all in the same direction. They don't have to be the same strategy. They can be two different strategies. But if I saw, like I did today, and we'll reverse engineer this, at 8:05, 8 o'clock, and then I'm talking with the guy, I said, this is really interesting, sir. Pay attention because I'm telling you, when I see a bunch of trades come off this quickly in one direction, usually the market starts to follow suit. Holly, the AI, is seeing things bubbling under the surface that we can't see and quantifying digits and numbers that we can't begin to understand. And it's finding tells and it's finding early warning signals. So what I'm trying to say is today was yet another example, and I've said it so many times. A lot of times it happens at 10 o'clock Eastern during the market when we have our data points come out, like consumer confidence or purchasing managers index and things like that. The market will pick a direction. But I will notice that before that market kind of picks a direction, I'll see Holly fire off a few trades in one direction only. And that's what I've been calling directional bias. And so we don't always have to get so focused and hung up on the individual trades. But if you're somebody who's thinking about really wanting to go long today, and you see Holly just fire off 5 or 6 short trades, if I were you, I would pay close attention on that and maybe sit on your hands before you go long, because more often than not, I see the market start to follow suit and roll over, whether it's short or long. It's happened in both directions, and it seems like, in my mind, if I had to quantify it, 80-85% of the time, when a quick burst of trades come out and they're all in the same direction, get ready, because I feel like that's a great tell that Holly is giving us for what the market is about ready to do. And if you go to 8 o'clock today, can you show 8 o'clock on the SPY? I mean, you'll see exactly what I'm talking about.
Yep. Okay, so here's intraday on a 5-minute, and here we are at the 8 o'clock.
There it is, right there.
Right here.
Yeah, so we just kind of popped up, worked around a little bit, back and forth, and then all of a sudden Holly gets short 5 or 6 things. Look what happens over the next half an hour. The market drifts lower, tries to bounce, drifts even lower, and for the rest of the day, that was the call. So once again, directional bias is something that you can glean from the AI. It is seeing something. It might not be on the individual level, but when you see a few handful of directional bias going in the same direction, please pay close attention to that, because we're all learning as we go here, and what I'm learning is that is a very significant tell and can be used as a really good indicator in real time during the markets.
Yep. That is absolutely true, Steve, and it's just another example of repetition. The more sessions you spend with Holly, those of you who have been watching from the onslaught, have almost a year under your belt. When you saw this type of activity occurring, you already knew something was up, just as Steve and I did. And that's really because we've been observing Holly ever since she first came online, So, just like Wayne Gretzky used to say, half the battle is just showing up, Any class that you've ever taken in the past, That really is half the battle. And not only is learning to navigate the markets and extract alpha out of the markets a class, it never ends. It's ongoing education because the market changes so dynamically and so quickly these days that if we don't change and adapt with it, we're not long for the trading world. So, interestingly enough, somebody was asking about how to handle the Holly trades. How do I interact with these trades as they come out? Well, of course, there's a lot of different ways to approach that, but what we try to illustrate here is just a tried and true method. Of course, we affectionately call it the Holly Trinity, playing off the Holy Trinity, but it's composed of 3 parts, and that is, number 1, we need a high-quality information source. That is what Holly is. She's just another high-quality information source, but she is spitting out plays that have a statistical weight to them. Now, can't really place a statistic on this, but if you interviewed a random sampling of 100, 1,000 traders across the board, and you asked them if they were trading with statistical probability, no would probably be the most common answer. Most people just aren't that advanced. They're looking at old school indicators, things that have been on, your various charting packages, traditional metrics, and not to say that those do not have merit. However, it's deciding or figuring out, well, when is the MACD indicator going to work? When is the RSI overbought 80, 20? When does that really, when does it get better than a coin flip? Well, the answer is statistical probability, because if you notice, when we look at the strategies tab here, we can see what the statistical probability was for these strategies coming into the session today. Looking at the most highly weighted one coming into today's session, the short strategy weight for the 8 was coming in at 81% accuracy over an approximate 40-day back test, a little over 2 months on the calendar. Look at how it did today. 2 trades and won both of them, performed at 100%. This guy spit out most of the trades today, the knocking on resistance. 14 trades, expected, we'll call it 67% accuracy, came in today on a 14 trade count at almost 79% accuracy. So that's what we're talking about with Holly, is that we knew as soon as this first trade came out, wait for the 8 today. And if we sort by strategy, we can see the first one today that little guy spit out was not quite 2 hours into the market, CBOE. Now we're going to look at that trade. CBOE, on the intraday, we can see the blue arrow is the candle where Holly said, this is really good, I'm going to have me a piece of this. Now we can draw a line straight across, as I've already done, just to kind of illustrate there's the price action. And CBOE today fits 2 different scenarios that we could interact with the stock on what we call a trade around, or when to add shares to an existing trade, or just a plain and simple trade around. Because what I typically like to tell people is that a trade around is an opportunity that Holly spits out. Might not necessarily go immediately, some of them do, but CBOE is a good example. Let's see here, we got short for the first time right here at the line, in this candle right here, as it was breaking down out of that range. Now, after we get short, look what the stock does. It pops back up above that entry price just barely. So we're in the money. Now all of a sudden we're slightly out of the money, which is completely common for trading in this market environment. Sometimes,
by the way, it can give you a better entry if you're pulling up, your account as well. You actually got a better entry than Holly did on that one.
Absolutely. And first and foremost, we're going to give this trade credence, number 1, because it's coming from a strategy that has extremely high potential. So number 1, that's the first thing that we're going to acknowledge when we're looking at this trade, and Holly spits it out. Number 2, because we're human beings, as Steve always likes to say, the chart is the footprints in the sand. So we can see CBOE hit a gap down, Of course, no surprise here, Steve, with this monster wick on the open,
Mm-hmm.
right? Just taking it right back up, triggering a bunch of stops, getting a lot of people out more than likely. And then the seller comes into play, puts in its low, and it takes a little breather. And at this point in time, that's when all the filters were met in that strategy, and Holly issued the trade. So we're in it. Maybe we didn't buy it. Maybe we're observing. But whether you participated initially with 100 or 200 shares, either way is fine. Then we get red. Okay. So what do we do when we see the position get red? Now, most of the time we're looking at long plays here. This time it's a short play. So once it pops back above, we can set a price alert for the same price so that we are alerted when it passes through there again. And of course, we're so used to checking long, but now we're starting to see good short plays come across. So we would set that price limit alert once we're back above, so that once it goes down again, we can figure out, do we want to add positions or do we want to take our initial position? But either way, we're not going to forget about it. And this one, came down relatively quickly. So, once this action starts to take place, it goes sideways a little bit more, and then the seller comes out. Now, whether we're in 100, 200, 300 shares at this point, what we have to pay attention to next time is the emerging pattern. Of course, this is one of the simpler patterns that you can focus on, but it's very effective. It's also a fractal pattern, which is why we like it so much. So Holly calls it here, beats around a little bit here, goes from green to red, red to green, but that's always a good thing for us because it's going to make us aware that, statistical probability is there. The time it takes for the trade to actually, go our direction, sometimes it's immediate, sometimes it takes a little bit longer. But once we see the position start to work and we come down here and crack these lower levels, then that is also another good time to add to that position. And this is just the classic thing that we see from Holly. A lot of the times after we see these signals, we see the little micro consolidation occur. Sometimes it's before, sometimes it's after, sometimes it's before and after. But once you get used to seeing these things, all you have to do is be able to draw some horizontal lines here to establish these breakpoints.
Just let Holly get it on the radar, and you keep an eye on it using price alerts.
It's
Inside.
And the whole issue here, ladies and gentlemen, is simplifying. High quality information, first part of the Holly Trinity, whether it's Holly herself or another alert or top list window. We look at the footprints in the sand, which we're doing right here, and then we either act on it or we set a price limit alert to act on it later. It's as simple as that. You may notice that we don't have any moving averages or any crazy studies on these charts, but if we did add some of those things, or if you pulled up this chart in the same time frame on your charting package and you started overlaying all the moving averages and the Bollinger Bands, you would probably see some correlations. But that's all they are, right? All we're interested in is price movement and being able to identify the price movement in the simplest possible equation that we can come up with. And from what we've discovered and seen and practiced over and over again, this little methodology here is the way to do it. Nice, simple, effective. All right, so let's take a look at a couple of more trades, and we're just going to go ahead and let's just sort from the biggest winners on the percentage basis. So RIC here today, a short play, but once again, kind of a stretched out chart. Once we get the short signal.
Hang on that one right a second. I mean, go ahead. Can you show the entry on that one? It's right up there at what?
Right.
1073?
Yeah, 1073.
Okay.
So.
Okay. So that's not going long, folks. That's going short.
Exactly.
And this is the kind of stuff that you're going to hear Andy and Jamie and myself try and really pound home is contrarian type entries. You can see that, noisy charts, they just kind of go back and forth. So trying to buy breakouts a lot of times just doesn't work. And in this particular case, Holly identified, hey, this price is getting just a little bit too high, it's time to fade, as we call it, a fade. You're going against the price action in one direction and jumping in front of it and going the opposite direction. I think if the market, big if, if the market turns towards short selling, strategies start to work again, you're going to see the shorts that do work are the ones that are more like this, that use a bounce in price to establish a short rather than chasing a new breakdown in price to chase a short. So that was my 2 cents on that particular entry.
Yeah, and showcasing these patterns, I mean, what we're seeing, Steve, is, on this one, yeah, I can see exactly what Holly's doing. We know that the statistical probability of knocking on resistance is pretty darn good coming into the session, right? 66.7%, way above a coin flip, right? So it all depends on the chart. It all depends on those footprints in the sand, because the footprints in the sand up until this level, nothing sticks out to me. Now, taking the short with Holly because it's statistically biased, yeah. So in this case, after seeing this entry and what had come before, I'm like, okay, well, just play it. Just play it straight up. I don't really see any trade around opportunities because of the stretched out wicks that we have here, kind of just mess everything up. And it's just about being able to identify this is the animal that has statistical probability, but now whether or not you want to leverage the trade and tack on more is going to depend on how pretty the chart is, correct?
So speaking of, what does the daily look like? Because that would be the first thing I would do, the daily.
Yep.
And we can see that wow, interesting. We're coming off 2 days of real hard selling, so there could be some more meat on that bone. And it's really important, you guys, to not just get focused and zoomed in on the intraday. Yes, that's a great intraday fade. I love it. What's the bigger picture? We've been coming off 2 days after a big run-up. There might be a little bit more juice to squeeze out of this thing, and then maybe bail. So keep the time frames in perspective, and definitely don't forget to look at that daily chart.
Right, and especially if you're looking at overnight type of activity, for sure. Okay, so just wanted to kind of give a different, this chart definitely much different than the CBOE. Let's see, VIPS, another, coming from the same strategy, and we can see, when that signal was triggered, we can see it lining up with, the high that it put in. It just barely penetrated that high that it put in on the open.
That's what it's designed to do, actually, yeah.
Yep. And, we can see here at that point in time, we're kind of in, right in the middle of the body of that candle. So once again, another really timely entry for Holly. And then, of course, what do my eyes go to immediately here? Well, if we got short here, pretty much could have been out of the money, maybe a penny or so at one point in time, and then we get a nice follow through, and then of course my eyes gravitate to this
support
area.
Ledge right there. There's your next ledge.
And then we're like, okay, I'm going to get 100 with Holly, and then boom, we draw the line. When it comes back down and it starts printing through that level, boom. Depending on how you like to go, you tack on another dollar amount or another 1, 200 shares, how many ever you're comfortable with, and you're like, okay, highly statistical probable to start the trade, and now that highly statistical trade, highly probable trade, is exhibiting another pattern that we like. Oh, even better. Time to really leverage that trade, and look what happens.
Consider adding on that follow through, yeah.
Absolutely.
I'm just going to say it again. I keep staring at your screen, and I just see all those short trades, just short, short, short. If you have Holly and you had that up today, and you were doing your own thing, going back and buying breakouts and buying and selling for a loss and buying and selling for a loss, and wondering, dang, what am I doing wrong? It just might be worth it to take a look over and see what the unemotional robot next to you is doing, and remind yourself that maybe long on a day like today wasn't necessarily the right prescription. So I just continue to want to hammer that home as a bigger picture, because that's the way we can look at Holly, the bigger picture as well as the individual trades.
And then we can see, selling strength only had one trade. Of course, it won, and not quite the biggest winner on a the profit percentage, but from a dollar amount, when we pull up PRAH, I mean, once again, when we're talking about really choice entries today, you have to include this one for sure, because once we get the entry signal here, and then this bar forms, and then we start getting this sideways action, you know, uh, always a good sign. Always a good sign. And whether, you know, you drew some lines at the bottom of these wicks or you're using the bodies here, once again, this animal looks familiar. You know, it's not by coincidence that a lot of these patterns look the same day in, day out, and very similar in action, price action, compared to the long, you know, to when Holly puts on the long. It's the same pattern, but just inverted in this case. You know, we make our good entry up here, whether we're watching and go, okay, statistically highly probable trade. We get into 100 here, 200, we go sideways. You know, as you're watching it and this forms, whether you draw the line back here or up here, it doesn't really matter. But when things start to get crazy here, you know, and of course it tried a couple of times. But as it keeps on trying and finally busts through and closes these bars with some good bodies, you know, it's off to the races. In any case, it's another low-risk entry that we can make in this little sideways consolidation or in our 70 type pattern that emerges. All right. So let's see here. I believe DYN was yet another good example of when to draw that line, because here we are at the original entry. And we can see here, clearly obvious that, you know, once we put in the trade here, we just kept on going. Of course, this isn't that much real estate when we look at over here on the ledger, because we make an entry at 1306. The stock promptly went to 13 and 19. So not near enough for a stop out, as the stop loss was about a quarter on that trade. But once again, if we set the price limit alert here, as it went red on us, then once again, we see the same old song and dance. When it does come back through that level, a lot of the times, it's another good entry opportunity. All right, so I was just taking a look at the question up there in the panel. Barry doesn't show a lot of the Holly screens. And, you know, I think Barry will showcase some of the trades in the room, but, you know, the reason he doesn't keep Holly up all the time is because obviously the room is free, and there may be some people in there that are not subscribers, so we can't necessarily have Holly running the whole time, but we can showcase some of the trades that she does in there. Barry typically does a pretty good job at
he'll go in there and talk about
some
a
Holly
trade,
content in. Yeah.
talk about a column or how to adjust or how to delete a column, but it's never just sitting there statically for many reasons.
Absolutely. All right. So, you know, I think we've gotten through, you know, we could just keep going through these trades, which on a day like today, it is nice to see just these really choice entries. You know, there's the other one from Wait for the 8, which was 2 for 2 today on that STI, and that 43.20 right there, Steve, really nice entry, you know, just happening to coincide with a range break that it already kind of flirted with. And I've seen this a lot today. A lot of the stocks flirted, you know, it took another little pop up before they finally capitulated and, you know, went down to those lower ranges. But typically the you know, the little bounce up wasn't enough to get people stopped out, which those are the type of plays we like to see for sure. But once again, just, you know, the beauty and the simplicity and the breakdown and the timeliness at which Holly was calling that trade there. Good stuff. So if we went through all the rest of these, we just see more of the same stuff. Took the opportunity to go over some of the bigger movers. And of course, when we see these, you know, more passive conducive charts where it's easier to read, it makes all of that information a lot clearer. But once again, the only way we're going to get familiar with the process is through repetition, repetition, and more repetition. All right, so I think that pretty much does it for Holly. Steve, any other comments to make about Holly before we...
No, directional bias. I see a lot of trades on there, but I also see one direction today, so pay attention to the directional bias.
Yep. Okay, so let's do this. Let me pull up my price alert window.
Oh yeah, for those of you who showed up last week, we dealt
Yeah,
out a little bit of Halloween candy.
yes, we did. All right, so why is my... Oh yeah, I added that. We're going to focus on these trades. I'm just wondering why my triggered column is not populating. Stand by 1 second. Okay, for some reason I had to refresh it.
Yep.
Okay, so
Which is a
what
great
we're
trick
not...
that he just did, by the way. You guys ever hung up and froze on something? Watch what Jamie does.
Right. And by the way,
Data's
I'm gonna omit HPQ just so we have only the, as
ones
everybody
from
can
last week.
see, all of these that we're about to show you were created last Monday, which was the 19th. I'm just going to get this guy out of here, just get him out of the way. And by the way, if you didn't see what I just did there,
Right.
I wanted to get everything to refresh. So if this ever happens to you guys sitting out in the audience, what we do is we come up to Account from the TI toolbar, and we just click on Reset Connection. It'll reset everything. All right, so here we see the limit alerts that Steve and I passed out to you guys last Monday. The week before that, I forget what was the big winner last week, Steve? It was the one that took off for a huge point amount, SRPT?
STRP or
STRP, one of those. I'm dyslexic. But anyway, that one was huge the prior week. And then last week, AGIO was given out along with these other three. However, AGIO.
What a thing of beauty. Mm-hmm. There's so much going on there. There's the fractal horseshoe on the daily chart. You have the gap up, the failure to fill the gap, moving back higher. Then you have a very well-defined pivot point. Well, not only that, what do our notes say? This is a trend change lubricant with 55% short the float. Yeah, that's how we would expect that to work every single time. So imprint on that. One that we didn't set is NAV, but go ahead and put up NAV, and you'll see kind of very similar, same thing. NAV had also a gap up with a failure to fill the gap and a move higher. Once it blew through highs there, 70% short the float, made everybody go nuts. So, it's an interesting strategy that's been working right now. We always try to remind everybody what's working and what's not working. Well, the trend change lubricant with high floats, that's where we found that one, and that's why we notated it as such. The other one, OVAS. OVAS was also a trend change lubricant. Well, it gave you 2.5 days of really nice alpha there, with that one being short over 32%. Once again, identifying the trigger level and the pivot level using our price alerts. Again, 2 nice green candles to be selling while you could on the way up and take some profits. Who knows what it's going to do? It could come back and just base right where it broke out of future prior to resistance becoming future support. So just wanted to remind you guys that that's still what's working. However, we really don't have any of those today. Our trend change lubricant factor window is blank. The cupboard is bare today. There's really slim picking. So the stuff that we are going to dish out a little bit is going to focus and switch over to that washout bounce setup that's been working so interesting lately. But anything else you wanted to add on last week's price alerts? I mean, hopefully some of you had these go off in real time and could see what was going on with them, and just hope we're providing some good directional movement for you out there when we give these out.
Yeah, absolutely, Steve. And AGIO, I mean, once again, it's the beauties and the simplicity. Now, if we back out of this chart, we are looking for stocks that are beaten down and in the lower percentages of their yearly and lifetime range. But that's one part of the equation. When we look here, you should start recognizing, hey, well, this is some of the stuff that we're seeing in the Holly trades on the intraday, because all we're playing right here is a range break. We're just looking at a different time frame. When we pull up that CBOE, here's the pattern to the reverse side on the intraday. So that's why we like to hammer these patterns not only in the intraday, but on the longer term, because when you start adding additional things like short float that add fuel to the fire, it's even better, and those are always the ones that we want to be aware of and find, and that's what we do, is we help you find the ones that have the most potential for alpha. Okay, so, just between the AGIO, OVAS was up a point at one point, now only up 27 cents, and of course we did have a couple of small losers, the EPZM and the OSUR. But hey, 4 points in a week, take that every day with potential up to 5 on this little basket of positions. So keeping with tradition, we're going to delete these guys.
Mm-hmm.
And even though the cupboard is bare, and what Steve was saying is, here's the window that we usually, peruse, and it's usually got many, many symbols on it, but due to market conditions, they're just not showing up. And the ones that are there are either already gone or they just look too terrible to try and deal with. So we've got some washout plays. And we do have one limit alert, but guess what? It's a short play. So let's do the washouts first. Hey, Steve?
Okay. Why not? Yeah, AJG. And again, going to the intraday, our first double check on these is to make sure that we have that stupid candle on the open where everything was sold and bought back in the first 15 minutes.
And here we have it.
And check. Okay. Thank you, HFT, very much. But that's what we actually want to see before we start making an entry decision on these types of stocks. If that was in the middle of the day or towards the end of the day, we probably wouldn't be looking at this stock. But check mark that box. That was a stop hunt on the open. That's when the algos like to run stops. All right, well, we've got a decent daily trading range as well. The daily chart, it looks to be moving in the right direction. Looks like a cool breakout there that was bought 2 days ago by a few people, and they probably put their stops in and said, well, I'll just put my stop in down here, and what do you know, more than likely in the first 15 minutes they got stopped and bounced right back up. So I would like to have seen it close right at highs, but I'm not going to be a beggar. Beggars can't be choosers. Nice looking long-tailed wick satisfied the amount of trading range to trigger the minimum filter on this one. So I would use the high of today. If the market moves higher tomorrow and we actually can take out today's high, this could be a decent 3 or 4 day hold.
Right, so the high is 50.54. And this is a washout on the daily. All right, that one is working. I believe next was
Cena.
And of course we can see
different.
the action right there.
It kind of pulled itself back to that pivot point at the bottom of that wick. Interesting, but definitely ran a lot of stops over the last 1, 2, 3, 4, 5, 6, 7, 8, or 9 days. So again, let's take a look. What do we have to check mark? Make sure it was done in the open. And oh yes, you evil HFTs, you. Look what you did. Mm-hmm. Okay, so that's a check. I would just use the high of today, and everybody that bought this thing 3 days ago probably got stopped out and don't want to get back in, but we'll use their pain as our opportunity.
And that one is working as well. And then we can't forget little Pip.
This one's a little different. You can see just by looking at the daily chart there, very tight range. It's a low price stock. So zoom out even more. It's been having a nice little move, but I think it just tried to stop out a few people that came in a little bit late. And once again, even on this little guy, the first 15 minutes, yep, there it is, the first 15 minutes washout on big volume, so that satisfies that. But this is on a very smaller type scale. It's a $2.90 stock, but still, it has all the footprints of the possibility to move higher after washing out those stops.
291.
Yep.
Will be the magic number. All right, and now for something completely different. URBN. Now, here we're seeing the opposite of the trend change lubricant that we typically do to the long side. We can see it occurring to the downside, and we've got a nice little area up here, and we've got a nice void to be flirted with for
Knocking on the
tomorrow's
ice.
action.
Looking for the weak spot, isn't it? And it's
Yep.
nice sideways action. The more sideways, and we've talked about this on the way up,
490.
the trend changes lubricant on the way up. You'd like to see it come up to resistance. Underneath it, move sideways, and then push through. This is the exact opposite for a short sell. We're not chasing red candles. We're just identifying a pivot level where the price action is trying to find the crack in the ice.
Oops. I must have done something wrong there, Steve. Okay, so low of today, 34.91. It's not trading down there currently. I just made a keystroke error more than likely. So the low was 34.91. So 90 should work, right? Or I probably said go long. There we go. All right, I think we're good. 1, 2, 3, 4. Now let me go ahead and I will share these in the chat window. All right, there they are.
Yep, dropped them in the chat window. All right, so for those of you who hit the plus button on that chat window, you'll see you can receive the code and mix those directly with your price alerts. And you'll be good to go.
Yeah, so Steve, I think we're all geared up. You know, we've got some alerts to watch for tomorrow. We've got the debate to watch tonight. The Open's going to come pretty quickly. It's going to be a night of entertainment. We can be rest assured in those regards. Everybody's entertainment is provided free of charge tonight.
I like the way my friend Josh, reform broker, put it. He said, "It draws near. Together we tumble into the night that has no morning."
Oh, goodness. All right. Well, hope everybody enjoyed the content. Certainly some good stuff from Holly, good stuff from the price limit alerts. We'll see what happens tomorrow. Should be interesting. Scott, if you're out there, we're ready for you.
Yeah, and I'll join you as soon as I find the mute button. Hey.
No problemo.
Yeah, so to thank everyone for joining us, we like to provide a promotional code that will give you a discount when you join up. We have 2 subscription tiers, and you can check out the details at trade-ideas.com/price. The primary differences between the premium and standard are the premium includes access to Holly, the AI, unlimited backtesting using our backtesting module, the odds maker, and advanced features like the shareable price alerts and RBI, GBI. So the premium starts at $188 a month, and the standard's only $99 a month. That code, the office all caps, will take 15% either your first month or year of premium or 10% off the first month or year of standard. And both come, any subscription comes with the full one-on-one hour power training session. So as soon as you sign up, go directly to support, click on training, and pick your preferred time and date to get the best start to using trade ideas. Thanks everyone for joining us. If you click on the handouts panel, you click on the little plus to expand that. You can also download a PDF with that code and this slide also, which has some handy contact information. You can follow Dan Merkin, our CEO, at Trade Ideas 1 on Twitter. Steve Gomez, who is here today, Today Trader, and Jamie Hodge, also hosting today, QuantBot. Trade Ideas Pro at Facebook.com is our Facebook URL. You can follow us there for some unique content. You can reach Jamie, J Hodge at Trade Ideas, or Steve at Steve at Trade Ideas. Of course, contact the info at trade-ideas.com for any technical questions. That gets routed directly to our support desk. And use the 619 number if you have any billing or subscription issues during normal West Coast hours. This will be up later tonight or tomorrow morning to watch the replay. You'll get an email reminder at some point tomorrow from GoToWebinar with a location where to find the replay. Thanks, everyone, for joining us. And thanks, Steve. Thanks, Jamie. Thanks, Andy.
All right. See you.
My pleasure, everybody. Bye. Have a good week.